Good afternoon, traders. Good afternoon, and welcome to Paul's Monday Market Update number 209 for the 5th of January 2026. Happy New Year to you all. I hope that you've all managed to enjoy a happy and healthy and prosperous festive period, and yeah, wish you the same for 2026 coming up. We've already started with a bit of a sort of lightning bolt or a few lightning bolts, etc. But more of that later. For those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can cover in the next 25-30 minutes, looking at the strength and weakness within FX markets, looking at some charts of interest, so some stocks, ETFs, and then a look at the live market itself. It is not a signal service. It's not trade recommendations. It is just what I'm looking at, and I'm sharing it with you, and it might be of relevance or interest to you in your own trading endeavors. As always, you are always very welcome here, and questions and comments are always welcome, but just remember that you are always responsible for your own trading decisions. If you want a little bit more education this afternoon, I will be running the Active Trades Monday Market Matters webinar at 2 o'clock London time. You can register on their website or use the QR code there. And what I'll be doing now, the education element, we'll be looking at trading the US market in 2026. 2025, I think it's fair to say, was a rather full-on, intense and eventful year. And I don't expect it to be any different in 2026. And if you're looking for a bit of help and support in your own trading, the VTP Trader Accountability Group, the tag, will be restarting this week for sort of a first calls, sort of a tomorrow evening opportunity if you want to make 2026 your best year. So ability to sort of be part of a group that will help you stay accountable, build discipline, and invariably work on improving your forums of trading. You can ping me if you're interested, or once again, that QR code there will help you. All right, let's dig into the main thrust then. Excuse me, I'm still trying to get over my kind of cold and flu from the Christmas period. Um, if you're new to joining us, or if you're new to trading, this might maybe look a little bit overwhelming or intimidating, but all it is it's just snippets that I take out of my own weekend model, my own STAM model, okay, that I do every weekend, where I'm looking to identify where the strength, trend, and momentum, primarily in FX markets, but also indices and commodities markets. The whole idea being that by identifying where's the strength and where's the weakness, it allows me to more effectively use my time, energy, and resources for the week ahead. So what is this telling us? How is it helping us? Let's just bring up the old drawing tool here. Okay, so yeah, here we are. All right, okay, into that should be the start of January. Okay, this is us. Okay, into the sort of the first full week of the year, and we're always looking at, well, where's the strength and where's the weakness? In terms of strength, the Aussie dollar remains top of the pile, as it did at the for the last part of 2025. And interestingly, Swiss franc has kind of bumped its way back up there, okay, having sort of slipped away throughout December. It's kind of had a little bit of a move up there. It's kind of interesting and curious because you've got Aussie and Swiss franc, who normally they would be at the opposite ends of the extremes, okay, Aussie being very risk on, Swiss franc being very risk off, but we've got them both there. Swiss franc is probably an element of some of the shenanigans going on in Switzerland at the moment, and also an element of sort of strength in those kind of precious metals, golds in particular. I see that what we saw was that the SMB this morning has, I think it's basically sort of told Swiss banks to basically start. They've effectively started to sort of lock up the accounts and money of the Venezuelan President Maduro, etc. So you'll never see that money again. But there you go. That's a different story for a different day, I think. But all we're interested in is, right, Aussie strong, Swiss franc is strong. Where's the weakness? Well, the weakness still remains at the other end of the spectrum with Japanese yen and the US dollar, both of which we will look at a little bit later. Not a particular surprise. Dollar sort of kind of weakened towards the end of last year again, having sort of butted up against 100 on the dollar index, which we'll look at. But what we have seen the start of this week, a little bit of dollar flow in, and that is probably just an element of a little bit of safe haven flows after the events of the weekend. Close to home, Sterling has kind of, it's kind of bumped its way up there into third place there. I don't necessarily particularly see any real particular joy there in terms of Sterling. It's more a case of that it's just not as crappy as other elements. Namely, we have seen Euro kind of weaken there, kind of from being in the top two spots there for the good part of the end of 2025. And we've seen Euro weaken, and then we're picked up there with the rest of the condols. So honestly, it's a bit of a mixed picture because normally you would expect, risk on at one end, risk off at the other. And never the twain would meet. But as I said, because we've got Aussie strength and Swiss franc strength, that's probably more a reflection of kind of commodity strength there. Okay, in terms of the sort of madness that we saw going on in both gold, silver, and also palladium and platinum, which were trades of mine at the end of last year, and that kind of reflecting in those FX pairs. Certainly, when we were looking today in terms of how do we start the sort of week, even though Swiss franc was kind of in second place overall on my kind of weekly view, sort of intraday wise, all right, we had a little bit of weakness there in Euro, Swiss franc, okay, and a few of those condols as well. So perhaps just a reflection of the yen and dollar being a little bit stronger because a little bit safe haven flows over the events of the weekend. What is interesting to me is that looking at the actual currencies, the main ones that I kind of monitor and trade there, they are an awful lot of them in STAM environments. Okay, there's a real thickness of the STAM, and also some particular patterns occurring and sort of reappearing there, which I'll talk more about on the VTP stage 2 call tomorrow lunchtime. For us here today, looking at indices and commodities, well, they are everything's green. Everybody's happy. All right, everybody's happy. Okay, everybody's starting the work. Everybody's starting this week a little bit giddy, even in spite of the events of the weekend. You can see that across all those major indices and the sort of kind of major commodities. For the most part, there's a lot of what I would call STAM 1 Bravo, which is like the strongest strategic buying conditions that are involved. And so, when you get all green like that, A, it's a reflection of the giddiness. B, it's also a case of, you don't want to particularly fight that. All right. I want to, as always, as I say to people, as I want to consider myself like a surfer, I'm looking to try and surf the biggest waves. So, as I said, a bit of giddiness to start the week. We also will have, not undoubtedly, as we're going to look at in the stocks, there will be fallout from the events of the weekend. We're also, of course, running into quite a bit of US day. It's the start of the month, start of the year. Okay, so we've got manufacturing PMIs in the US this later on this afternoon. Then you've got services PMIs for the US on Wednesday, and then of course in the run up to what we've got is non-farm payrolls on Friday, and that will give people a little bit of interest and to see how that's going. Okay, and also in terms of just the data, having had really the kind of last quarter of last year, that data all messed up because of that government lockdown. People will be interested to see how we're going to get back into a sort of standard routine and schedule that people can work with and build in. So invariably, with it being a jobs week, that means you're also getting the ADP non-farm numbers on Wednesday, along with the JOLTS job openings. You'll get unemployment claims on Thursday, and then non-farm and average earnings on Friday. Okay, so it's going to be an interesting week. It's going to be a busy week, and I expect basically even the STAM as it is to start to swing and shift over the next couple of weeks as we start to see the big boys start to position themselves for the start of 2026 and kind of the Q1 of this year. So expect some volatility, expect some moves, expect some swings this week. In fact, I'd say over the next 2 to 3 weeks, as I said, as the big boys start to position themselves accordingly. But we'll look at the live markets in a moment. Let's have a look at some charts of interest then. Okay, so this is the first one, Chevron CVX, not a real massive shock, I suppose, based upon the events of the weekend. So of course, you would have had to have been, living under a rock not to have seen the events of the weekend. Okay, in terms of Mr. Trump and his good old boys, basically railing into Venezuela and basically capturing the President Maduro and his wife and basically extraditing them out to the US and stuff. In terms of a military event, that was fantastic, absolutely spot on. But of course, as traders, we're interested in seeing, well, all right, well, how's this going to affect markets? Where is the opportunities and where are the threats for me? So, of course, naturally, people are interested in Venezuela's commodities, in particular oil, and will be interested to see, well, actually, what impact does that have on particular market participants? First one being Chevron, and the reason people are interested in Chevron is because Chevron never left Venezuela, and I don't claim to be an expert on Venezuela or the oil industry, but after the sort of let's say the changes in Venezuela with when Chavez came into to power, well, that must be nearly 20 years ago. Lots of those American oil companies, in fact, lots of Western oil companies left, but one that did stick around was Chevron. It's kept the licenses, so you would think that it's perhaps basically in the best place to quickly make hay whilst the sun shine, or basically drill for oil whilst everybody else is getting their act together, and that is reflected in the share price. Let's bring up the old drawing tool here. What we can see is last week, we already had a strong week last week, but you can see from what 155.90 where we closed. Look at that pre-market there, bang up, 12, nearly $13 in the pre-market. And for me, looking at this on the weekly charts, okay, it looks to me like about 170 has been a pretty strong level of resistance. In the same way, $140 has been a level of support there. It would not surprise me then, of course, just on giddiness, we pushed to 170. As always, you'll hear me, those of you who joined us regularly, I'm always intrigued, what does price do once it gets to previous, levels of resistance and support? Does it basically break, retest and go, which is, I'm looking for a continuation, or does it basically get up there and then give me a really nice sort of reversal before it moves back into the middle of a range like this? So, it's had a big bump. I can't imagine it won't get to 170 and right that kind of level. And as I said, then I'm always intrigued to see how does it operate? Does it have what it takes to get back up towards excuse my drawings. I'm a better trader than I'm an artist, but you get the gist, don't you? And that's what I'm curious. Does it have what it takes to get back to 190 there? Talking about another one, okay, Exxon, XOM, all right, Exxon Mobil, all right, another oil company. Interesting. I put this up because I think Chevron, Exxon Mobil, and is it ConocoPhillips? They're the companies that people are sort of saying they're expecting they'll sort of kind of see them manoeuvring quickly. And what we can see here, actually, that's on me that I should have got a better chart, but we can see, 120. All right, $120 has been, pretty significant resistance. That was a really nice 1, 2, 3 ski jump there. Okay, so you've had $100, big round number acting as support, haven't you? There, okay, in that range, and we've had this kind of really nice support trend line. Kind of almost like an ascending triangle. An ascending triangle there. We've already broken that 120 level, but see the pre-market is up here. Okay, way, way, way higher. So once again, as I said, Chevron's going to get up to 170. ExxonMobil already looks like it's breaking that. It's going to pre-market gap into sort of new highs. That starts to intrigue me. Okay, in terms of does it have the energy to carry on, or is it just like a pop and drop? So you might want to add that to your watch list to just see how does that play out over the next few days, because I think it's going to be fascinating as the market kind of processes all of this information. Yeah, just to confirm what we've been talking about is that this is XLE, okay, the energy ETF, and once again, as I said, excuse my drawing, but kind of mostly in a range there, I'd say between $40 here, okay, really nice bounce at the Trump tariffs there, of $40, and has been working its way up there, just a bit like what we saw in ExxonMobil, and we can see, but really kind of about that 45, 46 area, but you can see the pre-market already has us gapping up to 47. We have been up to 49. Then you're looking at, well, okay, if there's a lot of joy there in the energy sector, basically, does it have what it takes to pump XLE up to $50, that big round number? Okay, so as I said, it's already gapped up. Because it'll have broken this kind of level of resistance. As I said, I'm always intrigued. Does it basically come down, fill the gap, and carry on, or has it just like popped then dropped? All right. So watch that this week. There'll be some interesting moves playing out across XLE and then the energy sector in general. So what we've had is we've seen energy on the pop, and also what we're seeing is this is ITA. This is one of the aerospace and defence ETFs, the iShares one. Those of you who join these sessions know that I like to sort of keep an eye on aerospace and defence. It's kind of my kind of little hobby horse. And the reason I put this up, this is the daily chart, not the weekly chart. And the reason that is because on Friday afternoon, when I was doing my analysis, I noticed that basically this and PPA and another defence ETF and a few of the defence stocks themselves on Friday afternoon had already started pumping. They'd already started pumping on Friday afternoon. It just goes back to confirm what I've always said, is that somebody somewhere always knows something, all right? And it's just by human nature that they're going to use that for their own benefit. And is it a case of those defence companies, right? Somebody somewhere was, buying into those defence companies before the weekend because they knew what was coming and that there would be likely to be a bump on that. So we can see that has already had its bump there. The pre-market numbers are not, it's not as big a gap, certainly not as that on the oil companies, but if you look at a few of those defence companies, those few defence companies have had a bit of let's say, a jolly start to this week. And one of those companies, okay, that people have been interested in over Venezuela, and it's not a defence company, Palantir Technologies. This is the weekly chart, but they do an awful lot of work. An Israeli technology company that does an awful lot of work with the U.S. Department of Defense. A lot of actually defense companies across the world, and people are intrigued to see, how big an impact did they have? Okay, how much were they used? Certainly, what we can see is, from where we closed last week, there is a little bit of a gap up there. Okay, so what's that? About just under a $7 gap there. Okay, from where we closed last week. The intriguing thing is we talked about this a couple of weeks ago about we'd hit that big round number of $200, and then we printed that big engulfing candle, and it also kind of became a bit of a scruffy head and shoulders pattern, didn't it? Not exactly the most pretty one, and you might be looking at a neckline there around about what kind of 155. So, is this a case of this is a bump that basically puts a little bit of juice back in Palantir and shoves us north, or is it just a move that basically runs out of steam and it rolls over and we head back down to that neckline, forming another lower high? That's why this is on my list at the moment. I'm kind of curious. The 20 period moving average, okay, the 20 period moving, which is the blue on my weekly chart, has acted as good areas of support, okay. But last week we closed beneath it. We're gapping up towards it. Is it going to flip from being support to resistance? In which case, then we drift lower, or will just the overall general giddiness of markets ramp us back up towards $200? We're at a bit of an interesting inflection point, so that's why it's on the watch list. And this is SAAB. Said we talked about defence companies, and most defence companies, okay, have had a bit of a bump there. I talked about this about a month, 6 weeks ago, about how most of those defence companies, particularly European ones, but also US ones, had been in a fantastic run. This is the weekly chart, but they were running out of steam a little bit, and I was sort of kind of being a bit flippant, saying, well, something will have to happen to basically bump up those defence stocks. Okay, people won't want them drifting. I am the first to admit I had no idea that they would involve the kind of actions that the Americans took. But SAAB, well, certainly for the European defence companies, was up about over 6% this morning. You can see, it kind of come up the last couple of weeks of the year, and then we've effectively gapped up and run up there quite significantly. Okay, and that's probably an indication of people expecting to be trauma and war off the back of these events in Venezuela. Also, an effect that America is kind of shifting its attention to its own backyard, which means Europe has got to sort itself out, which means that European defence companies you would expect are going to benefit from European countries just basically looking to increase their defence spending. And my own view is that I think that is probably wishful thinking. I think European defence or European governments will talk big about it, but actually do very little. They still have a mindset that they think America should pay and defend Europe, and I can understand why Trump is upset about that. I would be myself, but in the moment, we can see that we're actually on the opportunity to make a few quid there off running European defence companies like that. And this is the final one for this week. We've done more than I would normally do just because there's so much going on. This is Jeffries, okay, small kind of retail bank in the US. This is the weekly chart. They're on here because they have got their earnings later this week. I think it's the 7th, so Wednesday. So they're the only real kind of name of interest this week. We did look at these a few weeks ago, okay, well, a couple of months ago, because a lot of it was around about here because they were affected by the kind of takedown of the kind of in the US, and kind of, I think it was in Texas in the US, southern US states of the US, a couple of automotive companies, and in particular automotive financing companies, kind of went Chapter 11 bust because invariably there was kind of almost like subprime loans to car dealerships, or that invariably sort of had just run out of steam and collapsed. And Jeffries was exposed to it. And we looked at it up here, and we can see that I talked about it sort of dropping heavily, and it did. It dropped heavily to 50. And I was intrigued to see, well, if 50 would break, definitely the 200 period moving average had to be the kind of next level of dynamic support. But interestingly, that kind of story, whether that's gone away, whether that's been covered up, I don't, I don't particularly know. But you can see yourself that actually, having collapsed all its way down there, well, actually over the last couple of months, it has kind of ground its way back up there. It's above $60, it's above the 20, it's above the 50, and now you're looking to see, well, what's been going on there? Okay, has Jeffries managed to either sort of ride that storm out or cover it up, or invariably, they've sorted it. People are pleased at the way they've sorted it. In which case, with the numbers coming out at this later this week, does it have what it takes to work its way back up to those recent highs at 70? Good numbers, and I'd say that there's kind of the start of the year giddiness might drift its way higher there, and that's what I'd be looking at for there. All right, so there you go. That's the charts of interest for this week. As I said, there's more than I would normally do just because A, there's lots going on. B, it's the start of the year. Let us switch across to the live markets now and see what's happening there. So if you just bear with me for a moment, we'll switch across to the live charts and take a look at what's going on. So here is one of my charting packages. This is kind of mostly indices and commodities. So what I've got here is this is Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, oil, West Texas, DAX on the weekly, Nikkei on the weekly, FTSE on the weekly. Interestingly, if we look at the American indexes, what we can see is that, really, the kind of, for most of the sort of last few weeks of the year, they were, for the most part, not terribly excited. Okay. And in fact, Russell, you'd probably say, has kind of drifted a little bit there. Excuse my drawings, but you get the gist. And that's kind of been interesting. And so I'll be intrigued to see how these markets open, all right, this afternoon. Okay. Based on, as I said, it is the start of the new year, okay, start of a new quarter. It is also the events of the weekend, and we're also going into that first week of jobs and insight into the US economy. Lots of people start to be taking positions this week to sort of position themselves accordingly. So we've been kind of drifting a little bit there. So not massively unsurprising for the last couple of weeks of the year. I think people who wanted a Santa rally, markets closed at good levels at highs, but the kind of last week or so they kind of drifted off a little bit. Like kind of people expecting that Santa rally to push itself higher. It didn't really occur there, but where it did occur was elsewhere. So and in particular, what we'll look at close to home is we have the DAX. This is the DAX on the weekly chart. We talked about how for most of the year since the summer, we've just been in a range there, going sideways, a little bit of a false breakout there. And then we were intrigued here, okay, when we came down to the lower end of that kind of range. And I was looking to see, could the 50, which had held the support here, could the 50 hold the support? It would break. If it did break, that was, pretty significant. But we can see that it didn't. It became dynamic support. And actually what happened is we pushed our way up. And actually last week and into this year, we've been closing on the weekly at highs. That's a very bullish move, regardless of all of the let's say shenanigans going on in Europe at the moment. The DAX works its way high now. a part of that will be some of those big major companies. One of them in particular, Rheinmetall, defense company, kind of dragging markets higher on that. But certainly you can see that was a pretty strong bullish end to the year there for the DAX, wasn't it? Pretty, as I said, we've just looked at the American indexes, which have kind of stalled a little bit the last couple of weeks. That wasn't the case with the DAX, and also closer to home, the FTSE as well. So, FTSE, after the Trump tariffs tantrums, okay, here, all right, we've pushed away and worked our way higher there, okay, and that's been a pretty strong trend for FTSE. Now, I watched the presentation or the interview with the Prime Minister, Mr. Starmer. Of course, he was naturally very keen to take the glory for that, and when in fact actually it's nothing to do with him whatsoever, I would suggest. And for the most part, this was a case of certainly in that kind of after April, sterling weakness had an impact, and that has an impact because the FTSE 100 is mostly a global index. It's not the UK index, and so invariably what we saw was as the sterling weakened, that meant that those companies had their overseas profits looked better. You also had an element of rotation in terms of an anti-Trump trade. Okay, people are shifting money to kind of the UK and Europe and elsewhere, just as a kind of a bit of a slight against Trump, and so we benefited from that, and also just an element of some of the companies that make up the FTSE 100. I said mostly global, but a fair bit of energy and defence companies, etc., who did well over, as you can see from what we've experienced over the last year. So, what we saw was, we finished the year okay, up at that 10,000 number. That's it's a significant number. It's a lot of sentiment, and as I said, I'm always curious when prices get to levels like that. How do they react? Does it break, retest, and go? Which case, I'll ride that trend more, or does it basically roll itself over? Okay, so there's nothing I can really tell on that at the moment. But as I said, once again, we'll see how that plays out over the next couple of weeks, whether that can maintain that trend or whether it's kind of running on vapors. We'll keep an eye and watch out for that. Looking here, what else we have, oil, okay, oil's still beneath 60 and hasn't had the kind of bump that you might have expected, but what most people will be interested in is gold. All right, gold, fantastic run there. Okay, interestingly, at the end of the last year, okay, we did sort of put in a kind of, that's almost like a bit of a twin towers, almost a bit of a move there. The actual monthly candle was it's a rejection candle. Okay, not a particularly strong one because we know it, but I'm kind of curious to see how this particularly plays itself out on that. And actually what we did was, we can see that we ended on gold as we kind of fell away there a little bit towards the end. Yep, we've had a little bit of a bump today. That's not a massive shock there, okay? That is just a case we had, this is a 4-hour chart. We gapped up, okay, into the start of this week off the back of the events of the weekend. That's not really a massive shock. That shouldn't really surprise anybody at all with that. Silver. Okay, well, of course, silver was the sort of the darling of the last few weeks of the year. I mean, just look at that, just look at that move on a weekly chart, And what I always tell traders is that, when price is going, parabolic, if you're on board, fantastic, ride it. If you're on the sidelines, be very, very wary about getting in because invariably you're more likely to be driven by emotion and then you end up buying the top. And I'm sure there's an awful lot of people who bought up here at 80, who bought the top. And then we can see the daily chart. That's that big bearish engulfing candle key reversal. We came back to 70. There's a huge big story there about the difference between, let's say, kind of paper and electronic contracts and the actual physical silver market there. Okay, and there are people better than me who can explain that. It's fantastic, some fantastic commentary across the internet. Ultimately, I'm looking at say, well, where's the opportunity? I mean, that is still, to me, that is still bullish, and we're going to be intrigued to see how does this particularly play out over the next couple of weeks. That 4-hour chart is, as I said, support at 70, support off the 50. Is that coiling up? Is that coiling up? Are we going to get kind of a little bit of a sort of a bit of a triangle building? All right, that's possible. All right, that's possible as people work out the kind of the direction of it for 2026. But that was quite some run. All right, quite some run there towards the end of the year. Before we look at dollar, have a look at Bitcoin. Okay, so let's have a look on the monthly chart. So on the monthly chart, last month, okay, having double topped and rolled over, we had basically this kind of, I look at that as like an inside bar, a spinning top, okay, bit of indecision. Go down to the weekly chart, okay, and what I was seeing was that we were what I thought might be a bear flag, kind of the look at the sort of all of those wicks that's providing support there. And then we started to put a bullish close in, all right, for the last few weeks, a bullish close, okay, higher than the previous candles. And the daily chart we can see has actually started to have a little bit of a bounce as we go into the start of this year. So there was kind of a little bit of bullishness come back into Bitcoin there. That's what I'll be keeping an eye on. All right, you might want to just take a little view on that and add that to your watch list if it's not already there. All right, so I appreciate we're overrunning a little bit, but as I said, there was an awful lot of stocks for me to look at earlier on. So what I'm going to do is we're just going to look at the dollar and then we'll look at sterling, okay, to wrap it up. I appreciate that we've covered a lot, and I do appreciate that I fly through these, okay. So it is, as I said, I'm just trying to share as much as I possibly can with you during the time we're in this session. All right, so this is dollar. Okay, dollar profile here. So what I've got here is Aussie dollar, Kiwi dollar, Euro dollar, pound dollar, dollar CAD, dollar yen, dollar Swiss franc, and dollar index. Okay, so whenever I'm looking at those FX markets and those commodity markets, I want to start with the dollar index. I want to get an idea of what's going on there. If I look at that on the dollar index in the monthly chart, last year, we had a real fall off in the dollar. And for the latter half of the year, we were looking at as if really a bit of a range there, weren't we? The thing that kind of made me curious is that on a monthly chart, these three candles here, which completed, you'd look at that as as an evening star, which would be a bearish on the monthly. So, then my thought is, well, is the longer term move going to be back down towards these lows around about 96, on the monthly chart? We go down to the weekly chart. Well, on the weekly chart, we had that double bottom. This was the FOMC cut, and we worked our way nicely up to 100, big round number, and then we drifted our way lower off that. And of course, the last couple of weeks of the year are always a little bit intriguing because you've got shorter trading weeks, okay, and also a lack of volatility and volume. But we were beneath 20, we were beneath the averages. They're drifting in towards the end, as I said earlier. If you look at the 4-hour chart to the start of how this week has started, well, invariably, we've had a little bit of a bump up, and I think that's just probably, as I said, that is probably a bit of safe haven flows there. Okay, it's easier to, if you're going to go safe haven, it's easier to do it in dollars, all right, than elsewhere at the moment. Okay, and so that's why we've seen a bit of that dollar strength come into there. Okay, at the start of this week. All right, will it be like that at the end of this week? Well, if I knew that, I would be a very lucky man. Okay, but as I said, this week is going to be an interesting week. Lots of news and data, lots of kind of processing and feedback from the events of the weekend, and then just general start of the year giddiness as well. So, it's going to be a volatile week, ladies and gentlemen. What can I tell you? Interesting looking at that kind of view. Even though we've been kind of overall weak, but a little bit of strength in the dollar. And you look at the opposite side of that, okay, euro against the dollar. If I look at that, euro dollar really, for the most part of last year, not massively dissimilar to that DAX, is that actually, we were in a bit of a range there, weren't we? Just in a little bit of a consolidating range. The last couple of weeks, we've maybe drifted lower from the top of that range around about 118. Will the 20? The thing that interests me is that this blue 20 has acted, as dynamic support, and now we've just been pivoting around it, and now the 20 is it's going flat. The 50 is rallying up towards it. It's going flat. Is it going to basically roll its way down, and are we going to move back down towards that 115? Remember at the start, I looked at the STAM, and euro is weakening. It's falling down. STAM is that likely to be part of a bigger picture? Certainly on the daily chart. If you look at that, I'd look at that on the daily chart. That was a double top there into the sort of mid part of December, and we've kind of accelerated lower. Will that daily 50 hold? All right, will that daily 50 hold as support? If not, then you're next to 200. And then, as I said, maybe I think we go to 1500. All right, that might be the kind of move which would indicate euro weakness, dollar strength. So keep an eye on that, ladies and gentlemen, for the next few days. Well, let's finish off with a bit of sterling. All right, so finish off with a bit of sterling. Okay, so sterling profile here: cable, pound yen, euro sterling, pound Swiss, pound Aussie, pound Kiwi, pound Canadian dollar, and FTSE. FTSE we've already looked at, but let's have a little look at cable. So We saw the bounce here. Okay, this is the weekly chart. We saw the bounce here off the 50 and the kind of above that 130, kind of running in towards the sort of budget, and then we've had that kind of bit that dollar weakness, a little bit of sterling strength there. Okay, and that's what we saw. But if you look at that, even last week, that's I look at that as a bit of an indecision, spinning top inside bar there. Okay, for sterling, we've just seen that whilst dollar was weakening, was starting this week a little bit of strength. And we can see that with the dollar as pound against the dollar. And I'd look at the daily 20. That would be my kind of dynamic support level. 4-hour chart, not really giving me huge insight. What was interesting was this is the hourly chart for my intraday trades this morning. Once we popped up here, we're kind of I can see us drifting our way back down towards those lows of last week there on the intraday side for cable. Pound against yen. Well, the weekly chart, that has just been an indication of Japanese yen weakness. Yen has been stuck at the bottom of the STAM all year. Sterling was in the kind of top half. You really just had to basically sell the yen and buy everything else. Is that changing? No is the answer. I thought it would. I thought there would be a much stronger kind of reaction to the Japanese raising interest rates, but it doesn't really seem to have slowed down that kind of juggernaut at the moment. Maybe that's what we'll see in the start of this year. Maybe we'll see the start of the year. That's just a speculative move, but you can see for the moment that is still sterling strength, yen weakness there. The other one that interests me is pound against Swiss franc. Is that having been most of last year in that kind of Swiss franc strength, sterling weakness, we kind of started to work our way a little bit higher in this. And since we started, today we've had a little bit. Sterling has been holding. Sterling Swiss has been holding above that daily 50. And is this a case of we're going to get a bit of Swiss franc weakness? That's it's kind of Swiss francs at number 2, sterling's at number 3. I normally don't like to trade strength v strength. I like to trade strength v weakness, but there is certainly something building there, so you might want to keep an eye on that. On the flip side, we've just looked at euro against the dollar. If we look at euro against sterling, we put in this great run for a couple of months, for a good 6 months last year on euro sterling, and we kind of tapped out here. There wasn't a beautifully clear sort of reversal on the weekly charts, but it just you can see the wicks pointing up and invariably just making lower highs all the way we go. And if I go down to the daily chart, you can see that, really having tapped out there, okay, in sort of mid-November, we've been working our way down there. That's sort of, kind of not it's more of a kind of a broadening formation, but you can see there's that euro weakness, bang, maybe a smudge of sterling strength, but there's really been that kind of euro weakness, today. We just literally just dumped there. That's the euro 30-minute chart. And that was just some kind of nice move down there, wasn't that? That's a real proper bearish trend. The Comdols are a bit, they're a little bit indifferent because the way they've been working, the way they've had that strength against sterling. But we can see, Aussie is coiling up there, pound against Aussie. Pound Canadian dollars always just kind of in a range. I thought pound against New Zealand dollar, we might get a kind of double top there with that kind of engulfing candle key reversal, but as you can see, it couldn't break the 20 and it's grinding its way up. I mean, it could still roll over, but that's kind of it's a bit of a position there. Okay, so not great for a trend trader, but fine if you're a range bound guy. Okay, ladies and gentlemen, right, we overran there a fair bit, but I do apologise. There's just lots to cover because of the start of this year. Normally it's about 25 to 30 minutes. Normally, as I said, I fly through because I'm just trying to share with you as much as I possibly can. I hope you found that useful. I hope that's given you a little bit of help, a little bit of insight that you can use in your own trading. As always, I wish you the best of success in your own trading. If you want a bit more help and support, as I said, the Trader Accountability Group starts tomorrow, okay? And, you're welcome to ping me if you want to use that to help you, okay? So, thanks, Ola. Great to hear from you. Great to see you, and Happy New Year to you. Happy New Year, everybody. Have a great trading week, and I will speak to you soon. Take care, everybody. Cheers.